Hello, everyone. This is Chris Vogt, and welcome to today's live stream from the Realtors Commercial Alliance of California. We're very excited to have you here. And today's guest, Scott Choppin. Scott is the president and CEO, founder, chief bottle washer of the Urban Pacific Group, correct?
Correct. Yeah. Chief
Yeah.
bottle washer mainly.
Yes, do lots of bottle washing, especially when you have little kids or grandkids, right?
There, man. Yeah.
Yeah, so we're happy about that. So Scott and I were having a little bit of fun talking before we went live, and we are going to have a fantastic broadcast today. We are the Realtors Commercial Alliance. We're the only commercial association of realtors in the state of California. And our mission statement is that as the only commercial association of realtors in California, we empower our members to thrive in commercial real estate through education, networking, and fostering collaboration among commercial residential real estate professionals and business brokers. So we actually were formed back in like the mid 90s was our actually incorporation. So we're a very old association of realtors here in California. This is our 2026 leadership team. Helen Jiang is our president. I, Christopher Vogt, am the secretary, treasurer, and CEO of the organization. Matt Cortez is the director at large. Steve Haddadin is our general counsel, and I also serve as our association executive. Some of the benefits of belonging to our association include commercial education and training, such as today's live stream. And as the year progresses, we're going to be doing some special training and stuff that is only available for our members. So you're going to want to become a member if you're interested in that. Every month, we do a commercial real estate project pitch and professional networking Zoom, where you can share your commercial real estate haves and wants and connect with your peers. We are also planning to do some social events this year, and we have a member hotline. And here's the member hotline. This is actually a voice over IP internet protocol, which is a fancy way of saying we have a Google Voice number. And that Google Voice number right here, 949-371-6611, is a text line. And you can leave messages there, but no one answers the phone. So don't expect us to answer the phone if you call. Isn't that a terrible thing to say, Scott? No, we don't want to talk to you. Yeah, we actually do want to talk to you, but because we're a volunteer-only organization, leave us a message and we'll get back to you as soon as we can. I typically check messages first thing in the morning and in the evening after dinner. So if you get a phone call from me after dinner, you'll know why. Check out our website at RCAoC.org. And when you're there, be sure and sign up for our email list. And here's a couple of coming events. We have the live stream today, the commercial real estate broker's role in land development with Scott. And then coming up on February 18th, right after Valentine's Day, is our February commercial real estate property pitch and professional networking Zoom. And when you sign up on our website for our email list, you will get instructions by email on how to sign up for the Zoom if you're interested. We also have a Zoom coming up in March. And my goal this year, or our goal, I should say, is for us to do a live stream every month on some area of particular interest for the commercial real estate brokers community. So we are very pleased to have our sponsor, deferredtax.com. And so if you are interested in learning how to defer taxes and help your clients defer taxes, check them out at deferredtax.com. Scott, you've been involved in real estate development for quite some time, right?
My entire professional career, other than like a few years in the beginning when I worked in the trades before I went back to school and got my college degree. And after that, I was forever in the development business, going on 35 years.
So how'd you get started in real estate development?
My background in real estate development came from my family. So I had the, sort of lucky selection of being born into, an entrepreneurial family. So my uncle Mike Choppin ran a company in Long Beach in Southern California that did office development and some apartment development. And then my dad, Kerry, was also in the business doing predominantly apartment development. And so from that sort of gives you the, I think just the understanding of what a developer doesn't, I didn't necessarily want to choose it as my career choice after I got out of high school, hence the working in the trades for a few years. But ultimately sort of, came full circle and, got into the business, got my college degree, and then went to work professionally. And then we started our company, Urban Pacific, in 2000. And I've been doing that ever since.
Cool. What trades were you involved in?
I worked in the electrical trades. So I was an electrician, working predominantly, interestingly enough, on new construction apartments almost exclusively. So I was still in the apartment business even when I was in the trades in a sort of funny way.
Yeah, no, that's great. So I actually grew up in an entrepreneurial family also, and we were in the agricultural space. So I rode around with my dad in the
Mhm.
pickup truck, listening to him negotiate buying, leasing, and selling commercial real estate up in Northern California outside Sacramento.
Love it.
So
Love it.
we started out in California with 60 acres, and by the time we were done, we peaked out at 3,000 acres in production.
Gotcha.
So
In agricultural production.
rice, actually.
Okay. Very good.
Yeah. Yeah, we started out in cattle and different crops, and then we moved into rice. So
Love it.
both of us have a background of having great families. That's
Mhm.
awesome. Yeah. So when you started your company, what was your intent?
Well, coming from an entrepreneurial, family, you have that, like you have the gene in you, I suppose, the bug to like be independent and autonomous would be sort of the way I'd say it. And working for other people sort of like refine that and clarify that in me. And so I always knew I wanted to work for myself. That was like really never a question. It was just a function of like when it would happen. And so it happened to be that time that I decided, I had sort of come to a point in my professional development career, me working for other people professionally in the development business, had come to a certain point where the leap seemed logical. Looking back on it, I might have done it a little bit differently. But I made the leap at 32, which statistically is like the classic time, the early 30s when, most entrepreneurs launch. Like if you look at the statistics, and not that I launched because of that, it just happened to be, looking backwards, like I came to that realization. But I had been basically, starting to do, deals on my own, just for my own account. And so I had that, sort of basis for when I launched. I already had, a couple, they weren't very big deals at the time, but a couple deals that were in process at that point in time. So the combination of that. And then, funny enough, Chris, I had like a terrible boss in my last job. And so that didn't hurt my want to like go away from that, sort of a repelling force. And it was fine. It's a funny story. So I basically quit my job, driving home, and I call my wife and I go, "Hey, good news, bad news. Bad news is I quit my job. Good news is I'm starting my own company." And thank the Lord, she rode with me and still does to today. So we've been married for you know, almost 30 years at this point in time.
Cool. Yeah, we celebrate our 43rd wedding anniversary
Good for
next month.
you. Amazing.
So a long time. Yeah, I can't believe it's like I've spent
That's good. That's
over
good.
2/3 of my life married to the
Right.
same woman.
That's my wife. She says, I've been with you and married with you longer than I was ever, not, right? I think we got married when we were both in our sort of mid to late 20s.
Yeah, my wife was 21 and I was 20. I was a senior in college at Biola University and she had just graduated the year before.
Yeah. Good for you
So
guys. Congrats on that, Chris.
thanks, and to you also. So your first land development project, can
Hmm.
you tell us about that? And by the way, people, Scott and I did not rehearse any of this. So this is an organic
Yeah.
conversation. He has not had a chance to craft careful answers or anything. So this is coming straight from the heart.
Yeah. No, it's good. It's all, some of it historical. So, well, I'm going to answer your question slightly different way. So for most of my career, we didn't do land development exclusively. We always did land development plus vertical development. And in our world, we put those two together. And we've done numerous land development deals, so we can talk about that later.
Hmm.
But the first deal I ever put together was actually a senior affordable housing project in Fort Collins, Colorado, on a small street in Fort Collins called Elizabeth Street. And so we basically, found a piece of land for sale, tied it up, put it in escrow, worked with the city of Fort Collins to put a subsidy package together, which you do in affordable housing. You'll get money from the government to facilitate that. And then we submitted the tax credit application, and I won't bore you with all the details on that. But that ultimately turned into a deal. And then in that era, we did joint venture work with other affordable housing syndicators, they're called, which think of them as equity investors. That's what they are. And it happened to be that the job I had for the first few years of my career was working in affordable housing, real estate development, syndication investments for a company called Kaufman and Broad Multi Housing Group, which is a subsidiary of a company that people know called KB Home, not home building, but affordable housing, apartment development. So I had left there, like, let's say a handful of years earlier. So when I started to put these early deals together, my old boss, Mike Costa, who's still a friend, they did a lot of joint venture work. And so they would be somebody you could take deals to, and, they would bring the equity and pre-dev capital and help with loan guarantees. So we ended up doing a series of deals with them in those early years, all affordable housing. That was their specialty. And so, but that first deal was the Elizabeth Street deal.
Okay. Are you now or ever have you been a real estate licensee?
I have been. It's funny, I had my broker's license for many years. And then I can't even think, maybe it's 10 years ago, maybe less, a little less, but a long time back. I found that I just didn't get any return on the investment of time and, particularly the continuing education. I'm a full-time real estate developer, and we do also development services for third parties. And so I was already a real estate professional. And so the broker's license, I wasn't going to run a brokerage. I wasn't going to hire agents. So it was really maybe just to be, ability to, take the opportunity of generating fees. But my big issue was the continuing education, the time spent for that. But of course, like we're in California, legally, the liability that I carry as a broker being in transactions was like often far greater than the fees that I would generate from those. And then if I was going to sort of be a broker in my own, real estate development deals or on our development services side, again, liability, fiduciary duty. So when you sort of stack up all the liabilities and, offset them against the returns, it was just not worth it. So I basically let it lapse, quite a while ago.
Okay, cool. Now, when you were first starting in land development, how closely did you work with brokers?
Uh, Gosh, always have, do now and always will. Um, we're not a company who really focuses on like, off-market deals. Like a lot of developers will only look for off-market land deals, and there is a, certain strategic value to that. But we're always, our project comes first, and then the land and, financing, all that comes like after we've basically identified, the kind of project and locations we want to do it. So often we'll identify like a city or region, and then it's just a function of let's go out and find out what's on the market. And we've done a lot of off-market deals, so it's not that, we have people that make referrals, brokers that refer us deals often. In fact, I would say probably 95% of everything we've ever developed has come through brokers, some of it off market, some on market. And then, of course, a lot of our apartment projects we've developed and sold. Traditionally, we're sort of a merchant build company, meaning we build it, rent it, sell it. Although we're now in the mode for longer term hold. But we have excellent broker relationships for, people that have found. In fact, I've got a good friend, Matt Wenzel here in Orange County, Marcus Millichap. He's found like the majority of our land deals for us. And then he sold a lot of our apartment buildings as well. as you do, you build great relationships with brokers. So it's like key. And then on the development services side, where we provide basically development, like knowledge and capabilities, the predominance of the people we work with are actually in the brokerage community as well. And then in this case, they pair us up with their clients, landowners, or we help them get listings often, and then do a lot of work to, value enhance the opportunities, which helps the broker and helps the landowner in a combined fashion. So we do a lot of work there as well.
Okay. And so earlier you were saying that you do the land development and then you go vertical. So
Yeah.
basically, for people who aren't informed, what you're doing is you're getting a piece of land, you're taking it through the whole entitlement process, building up the units, and then do you hold the units typically until they're fully leased, or how does that work?
Yeah. So in our the predominance of the product we built is ground up new construction apartment buildings of, different design types and different unit mixes. And really almost the majority of what we developed, we've sold, again, merchant build style. Um, but we'll always basically hold them through full lease up, let's say, 95% occupancy or as much occupancy as we can get. In fact, to be honest with you, Chris, I'm thinking about it. We've never sold a building that was not 100% full. And we did that because, of course, we want to maximize value, right, in the sale. Like that's our goal. And so, to be anything less than fully leased is, goes against that, formula of, max, profit, max revenue. And then there's one caveat. I sold one deal once where the buyer was paying me a really good price, all cash, no financing contingencies, quick close. And his caveat was, I don't want you to lease any of the units. It was a small project, so it wasn't a lot of units, but he said, I want to put my own tenants in there, have my own property manager do that. And he was paying cash and it was a good profit. So we said, great. But that's literally the only deal we've ever done that wasn't, 100% occupied when we sold it.
Okay. And you started in Orange County, California, correct?
I actually am based in Long Beach, California, which is the very south end of LA County, right at the northern border of Orange County. We could basically throw a rock from my house and hit Orange County. But you can think of us as a, Southern California centric company based here, based in Long Beach. I'm a lifelong resident of Long Beach, fourth generation in my kids. And we live in a part of Long Beach called Belmont Shore, Naples Island, which is, really like just a little beach town, at the southern end of LA County, right on the ocean. And then from a development perspective, again, focus on SoCal, but we're really a California developer. You could think of us predominantly, although we've worked all over the Western United States. So we've worked in Oregon, Colorado, Arizona, and Texas. Although in the last probably, 10 plus years, we've been exclusively focused on Southern California. Just such a great market for us.
Okay. So you're pretty close to the Pacific Palisades fire area, right? For those people who are listening from outside the area, I'm
Yeah,
sure they've
yeah.
all
I
heard
mean,
of the fires. That's kind of
it's
national
like
news.
20 miles away. Now, in Southern California terms, that's a long ways away relative to traffic and time to. But yeah, the Palisades is up in West LA, which is, probably on a good day for, freeway travel. It's probably 30 minutes from my house, maybe 40 minutes.
Yeah. So is there any opportunity for people like you to do land development in that fire region?
Actually, it's a great question. So, not for us, not in the Palisades, but the other place that had a fire was Altadena, the Eaton fire, which happened at the same time as the Palisades fire. And Altadena is basically much further east in the foothills. You can think like near Pasadena,
Hmm.
if people looked on the map, just north and a little west of it. And our project services team is actually processing some interesting like starter home new construction projects. A developer approached us. He's from out of market and he's not active as a developer here, but he wanted to build and buy these lots in the Altadena area. And then under California law, we can actually build some higher density, like on a house lot, like 5, 6, 7,000 square feet. The old house has burned. And then in this case, there's some zoning advantages that are granted us under California law. We can put like 4 units. Now, these are detached small lot, single family homes, had starter homes. But we've been processing, that and basically managing that entire development process on behalf of this developer. And in fact, I don't know if we're going to win this race, but we may be the first to come out uh, in new construction terms with any sort of non-single family residential type project in the Altadena burn area. We're going as fast as we can, but that's a development services offer. So in other words, we're doing all the work for that developer, and then helping him basically execute on his project.
That's pretty cool.
Yeah, it's a really interesting product. I mean, it's starter
So it's
home.
basically a home with three ADAs or ADUs. Is that it?
No, yeah, it's a good question. No, it's really think of it, Chris, as four smaller single family homes. I think the homes, if I remember correctly, are about 1,500 square feet, not including the garage. Each has a two-car garage, but they're think of them as like smaller footprint, maybe a little more narrow, unit plans, but they
Hmm.
are detached. The setbacks between each house is like 4 feet. So they're small lot, we call that, right? So they're
Yeah,
fairly tight, not a house on a big lot kind of thing, but it is a detached house. And where this really appeals is if a buyer is interested in buying a house, like they get sort of the feel, and sort of setup of a single family detached house. I mean, it's not attached, and you're not right next to your next door neighbor on a row home
right.
style when you get that. And again, it's relative to California, but these houses are probably going to sell in the $700,000 or $800,000 range. Now, people will say, "My gosh, that's not starter home." I get that; it's California. In comparison, Chris, a
Yeah.
a house that's probably a single family house, maybe on the small side, but on a single family lot, is easily a million two, million three in that neighborhood,
Hmm.
for an
Yeah,
existing house that's not in the burn area.
right. So over the last decade, what has been the project type that you've been concentrating on, or has there been one?
Yeah. Actually, we have been so again, we're a real estate developer predominantly developing projects for our own account as a principal as any normal developer. And then we have this services group I just got done talking about. So on the development side, we're really have been almost exclusive in apartment, ground up new construction developers I mentioned earlier. But over the last about 8 years, we've been specializing in a sort of very unique apartment type that we created, that's a 5 bedroom, 4 bathroom, 3-story townhouse unit. And so these are, larger units, 5 bedrooms, two-car garage, that look, and feel like a house, right? Like it's a big space, it's multiple bedrooms, it's got a two-car garage. It is an attached unit, so it's like a row home style. But what this product we call Urban Townhouse really facilitates is that we're marketing and leasing predominantly to middle income families. So we describe that as workforce housing. And this is a product type. So if you had a multi-generational family of like, let's say 6 people, mom and dad, a couple kids, maybe in-laws or grandparents that like live that way naturally, multi-generationally, we're basically providing them a brand new housing unit in this, in a project made up of all these units or that type of unit. And we're doing that all over Southern California, have done that over the last 8 years. And so built from really what was a small series of projects in the beginning, because as you can imagine, Chris, doing a 5 bedroom apartment unit was like really, cutting edge and rare and really still is. And then we've ramped up to now we're in development on 7 projects, close to 500 units. 4 of those projects are in partnership with Morgan Stanley as our LP equity investor. And so we've sort of grown this into now fully institutional grade offer, both in size of projects and unit counts in those projects, as well as the breadth of like geographic coverage, LA County, Orange County, San Bernardino, Inland Empire, Riverside County. And now ramping up really into an institutional grade production, where we'd like to do our goal ultimately is about 1,000 units a year of this 5 bedroom product. And, that'd probably be, 5 to 10 projects a year.
Wow. Okay. So you're taking land that has existing structures on it, or raw land to
It's
develop
both.
this stuff?
It's both. Primarily would be vacant land. Occasionally we'll buy a site that might have a house on it. So some of our early smaller projects. Like we did a project in Fullerton that was an old house on a really big lot with R3 zoning, which is like our perfect zoning from a California zoning perspective. And so we tore the house down and built 7 units of this UTH 5 bedroom product on that same site in a sort of older infill community in Orange County and Fullerton. It's a great little project.
Okay, so R3 refers to 3 residential units per acre.
R3, the way to think of it is, you sort of got R1 would be your standard single family, house on a 5,000 square foot lot. That's typical R1. And then as you go up, R2, R3, R4, you can just think higher density. It's not necessarily 3 or 2 houses. R2 would be 2 houses. So R1 is 1 house, R2 is 2 houses. When you get to R3, it's more like density or dwelling units per acre. And then every R3 zoning in each city is different. So like R3 in the city of Los Angeles is really dense, like let's say 100, well, probably like 50 units to the acre, where R3 in Fullerton, where we did that project, was, like 10 units to the acre. And so R3, the definition of it is, specific to each city. But you could just think like generally R3 would be your normal apartment zoning. And then R4, R5, if cities have that, would be, like mid-rise, podium, and sometimes high-rise, depending on what city it's in.
Okay, cool. Now, we've not really been dwelling on what we're here to talk about today so much, which is the role of the broker in this whole
Yeah.
process.
Yep.
So, and I know you mentioned earlier you're working with one broker for a lot of your projects,
Yeah.
but let's say that one of our members, like our current president, they've got a piece of land that's out in Riverside County, I think it is, and they want to, or they're getting it zoned for residential. So if that particular project, they thought it might be interesting to pitch to you,
Mhm.
um, what would you be looking for someone to contact you as a broker to pitch a project to you?
Meaning as us as a buyer of development,
Yeah,
sites.
yeah.
Yeah, so I think the way to think of for our UTH product, we build at about 20 to the acre. So if you have an acre of land that fits 20 units, 2 acres, 40 units, that kind of thing. Really for us in the UTH model, there's a few parameters. One is that we don't want to be really far out. Like, for anybody who knows the Inland Empire, there's sort of like the urbanized part of, Riverside and San Bernardino counties. Think like City of Riverside, maybe Ontario, if anybody's ever been over there at the airport. And so we want to be close to job centers and close to retail amenities. And then we want to be, within probably a mile or two of a freeway, not too much further away and not really too much closer. We're not like on freeway kind of builder guys. And then really the big thing to think about for us is a big push for us recently in that development model is we really like the Opportunity Zone Capital program. And Opportunity Zone Capital is originally was a, tax incentivized, equity investment type that was created in the 2017 Tax Act. And then it just got made permanent in the One Big Beautiful Bill. And what that does, Chris, is if somebody has capital gains, say they sold stock or they sold a company, they can roll those capital gains into like one of our projects that would be UTH 5 bedroom plus the OZ. And then that investment would own and operate the apartment community that we built and, manage, with the investors. And then if you hold it for 10 years, then you basically are tax free on that investment. You have to eventually pay your taxes on your original capital gains, but that's 5 years later from when you created the capital gains. But all the upside in that investment in that new apartment community, as an example, is all tax free, like 100% tax free. And then here's the really interesting thing about that program is like normally in new construction apartments, we always take depreciation, right? Even accelerated depreciation is back in the One Big Beautiful Bill, do a cost segregation report and take accelerated depreciation. Well, in a normal apartment investment, you take the depreciation, and then when you sell it, you're getting a recapture on that. You have to pay the taxes on that eventually. But in the opportunity zone investment, if you hold it for that same 10 years, you can take all the depreciation and never have the recapture. And to me, that
Wow.
that may be the most important thing. It's sort of a sleeper part of the entire model. Of course, everybody's focused on the 10-year hold, 100% tax-free of the original investment, which is fantastic. So we in our UTH program are really looking, I think, to predominantly, really move into that space for a couple reasons. Of course, we love the tax incentive structure, but more importantly for us, we want to own these assets for the long term, Chris, meaning these family-oriented apartment communities with these, townhouse product from like an ethical and, value-based position. We think we can be better stewards for these families over the long run just because who we are and what our mission focus is, which is housing families, than, Goldman Sachs or somebody else who might be a buyer of this community if we sold it. And so when you put all those together, we can hold long term. We have this tax incentivized capital. The capital allows us to, provide or focus on our mission focus, which is housing families. I'm at this point probably saying now that we would probably almost exclusively do those kind of projects on a go-forward basis with the goal in the next several years to build a portfolio of about 5,000 units of that, UTH product. And probably it'll be SoCal, although we're looking at NorCal eventually as well.
Wow. So that's really interesting. We have a lot of people from out of state that tune into the YouTube channel, of course. And California has this reputation of being out of balance between the owners and the occupiers.
Yeah.
So, how do you address that whole issue of an occupier skewed environment for dealing with things
Yeah.
like bad tenants?
Yeah. It's a great question. Well, high level, I'll say this. I get when people are negative on California. I'm often find myself negative on California, and I'm a native, and I still live here. But I also see it as a really interesting opportunity. So everybody knows Warren Buffett. Warren Buffett has this theme that he uses when he buys companies, that he wants the company that he buys to have a moat, he calls it. And the moat is some sort of protective mechanism, could be intellectual property, could be, a specific identity or a specialty in the product that they market and sell, and that he wants that moat to be there because that's protective of the business and, like positive for long-term growth and less competition, right? Like that strengthens and keeps the company strong over the long run. I look at developing real estate and particularly apartments in California as a moat, right? The California environment, the regulatory environment, the landlord tenant laws that you described. And so what that does is that keeps a lot of people out of California from a development perspective. And I'm fine with that. And I welcome that. And I also say about us, because we're natives and I've spent my entire career here, we understand how to choose sites and do ways and do types of development that move us away from that friction, or at least are protective of it. And so by the time you run the gauntlet of developing assets in California, when you get to the other end of it, when it's completed, it's very valuable, right? So
Hmm.
that's sort of the high level thing. And then the answer practically to your question is we make a lot of decisions day to day in our strategic focus and our like tactical moves that we make of where we select sites, what cities we're in, what regions we're in. So as an example, people will get like we're almost completely out of LA County and all the way out of LA City because those two government agencies or entities, municipalities and county agencies, um, county governments are like very, very sort of, let's just say radically social in the context of landlord laws and rent control. And then particularly City of LA has something called ULA, which is basically the other name that is basically the mansion tax. And so they've basically put in a law that got voted through referendum where every property, whether it's office, commercial, industrial, or big houses, mansions, but anything and everything that's over a certain value is taxed at 5%. And so if you're an apartment developer of any type, and your job is to produce value for sale or refi when you're done with the project and leased up, and the government takes 5% off the top, in some cases that might be your entire profit. And so between the regulatory environment, the sort of very progressive, political environment plus ULA, that has us out of LA entirely. LA County doesn't have ULA, but it has sort of, more progressive, hard-hitting politics. And so what that does, it has us move into places like the Inland Empire. This is why we're almost exclusively all of our projects out of the seven except one are in San Bernardino and Riverside counties that tend to be a little bit, much less progressive, maybe more conservative in the political stance, but also more business friendly. Many of the cities are welcoming housing. They've got good job growth. They've got, an environment that's more protective of like doing business, profitably that helps everybody, meaning job growth, housing growth, all those kind of things. And then on top of that, there's that very site-specific choices we make. I mean, one of the big friction points in California is our zoning and entitlement process. We have, other than maybe New York City, we have the highest level of regulatory, standards and rules and regulations of any state in the United States. And we don't like lean into that, meaning we don't go find the hardest projects in that environment. We actually go the opposite direction. Let's find sites that have the easiest story. So as an example, we always try to, probably 9 times out of 10, we'll do this. We'll buy a site that already has the right zoning, right? R3, like we talked about. So we'll choose that zoning or choose that site because the zoning and other things fit our parameters for, the ability to execute more clearly and cleanly. And then there's a bunch of other stuff, construction typologies, that kind of thing. And now California does have some rental regulations that like put caps on our rental rates, even as new construction. But most often we have an advantage as a builder of new apartments is that most laws have a 15-year exemption for new construction. So for the first 15 years of the lifetime of that asset that just got built, you have no regulations, you have no rent control, you have no rent caps, and I'm being very broad. And somebody may argue in the comments, well, I know about this law for sure. Like there's all that kind of stuff. But we made the conscious choice that the laws that affect us and our new construction housing at the state level are manageable enough for us to basically move forward with those, and also attract investment capital like Morgan Stanley, and we've got really great relationship with them, and they like the market and they like the product type that we build, our 5-bedroom product. So it's a lot of strategic and tactical questions every day, really, with the idea, fundamentally of like picking the least complex projects, site locations, cities, regions. Because what I basically my saying is, Chris, that complexity is the enemy of profits and development. The more complex you make any or all parts of that process, the less money you will make. And then the opposite is true. The more you can lessen or lower complexity, it's going to drop to the bottom line and make for more profitable and more expedient housing to be developed.
Okay. Thank you for explaining that. So let's say we do have some people who've got some projects. So number one, you're looking for R3, preferably as a starting point. You're looking for something that's within a mile to 2 miles of a freeway, but not freeway frontage. You're
Right.
looking for nearby services, probably including public transit. You're going to be looking at the availability of utilities. Like electricity connections are really interesting in California right now,
Mhm.
right?
Mhm. They are. I mean, we don't necessarily like, I mean, we have to have utilities, of course, but because we always pick these, mile or two or within that, sphere of influence of the freeways and in urbanized areas, we never really lack utilities. And yes, you're right, electrical connections to utilities are difficult, but most of the areas we work with cities and locations are under Southern California Edison, which is a normal utility and has normal complexity and friction, but is actually, if you use the right teams and the right engineers and the right consultants, can be, fairly well managed. The opposite is true in the city of LA, where you have the Department of Water and Power, or DWP for short. They are terrible. And in fact, that's one of the other reasons to stay out of the city of LA. If you talk to any California developer who's ever developed in the city of LA and they had a project that they had to connect to DWP in the city of LA, it can be a nightmare. Like there's stories floating around, people, colleagues, and friends that we have in the business that have a completed 100-unit project in LA, and they're maybe a year or 18 months in, still waiting with a completed building, mind you, C of O, except that they couldn't get the electrical connection, still waiting for DWP to connect power, permanent power. Nightmare, right? Like you have a, hundreds of millions of dollars, or, certainly tens of millions of dollars on a project that size, and you can't connect electrical, you can't get your C of O, and you can't lease units. It's like couldn't be worse. And so, like, there's one particularly guy that I'm friends with, major institutional developer. He is like, I am never developing in the city of LA ever again in my life. Like they have completely, utterly written LA off. And even in his world, I mean, there's all the stuff we talked about today, but the DWP thing was enough for him to say, just on that reason alone, I don't go back there ever. But SoCal Edison is, difficult, but manageable, I would say.
Okay. What else are you looking for in a real estate broker bringing projects to you?
Well, I'm gonna reverse the question a little bit. I'm gonna answer a question that, is maybe asked differently. One of the things that I do with brokers quite often is our development services team, including myself, work with brokers quite often where we may help them set strategy and directional decision making on, client sites that they're selling. We'll also help brokers quite often. So, as an example, we're working with a guy named Sean Ward at CB Richard Ellis. We're helping a client of his process a industrial small flex space building into industrial condos, and we're doing all the processing for that. So this may be more how I can help brokers than it is, brokers bringing stuff to me, but the trade-off is always there, right? Like they're looking for land, they need developers to buy it. We can help them find developers often. So one of the things we do, there's a good friend, Martin Porter at Marcus Millichap here in Long Beach. He's marketing a project for a client that we help them get entitlements on. But then as he's selling it, we're also making introductions to him to the development community, like people that we know and are colleagues with. And then also we quite often will help owners or buyers of land be paired up with capital. And so because we're a developer and we're in the capital markets constantly, we have really great connections with companies like JLL, Walker Dunlop, Newmark, all the big capital players are guys that we know well. In fact, my fraternity brother, Kevin McKenzie, is the head of all US capital markets at JLL. And so we quite often will help brokers and their clients and or the buyers get connected with capital for a deal. It's a little unusual, right? Like normally, there's not a team like ours, like sort of bringing that horsepower to the table. But we've facilitated numerous transactions where, we paired up with the broker to help their client find a developer, find capital, or the combination of the two, really with the goal to, enhance the broker's capability to increase the value to their client, and of course, the value to themselves as the broker. And then also the other thing we do is increase the probability of successfully closing a transaction, which, is inherent for all of us in the real estate business.
What kind of advice would you give an agent who maybe they've done a bunch of residential, they've been doing residential for 20 years or whatever, and they always have these people bringing opportunities to them in the land space that they just look at and they're like, I don't know. How would they get started in maybe pursuing those opportunities?
Yeah, yeah. It's a great question. Look, my philosophy as an entrepreneur and a business owner and, the manager of teams, I'm always really focused on the who, not how question these days. Like in the old days when I was a developer, Chris, and I still have the tendencies of personality. Like I would go learn that thing. Hey, I'm a residential broker and I want to move into commercial real estate and I want to sell land deals for apartment communities, let's say, something, I'm deeply familiar with. Well, I would go like learn all those things, learn about the apartment business, learn about land development, all that kind of stuff. And I encourage people to do that. This is not that. But if you're really going to make money, truly and the amounts that most people want to live a good life and take care of their families, you have to find people who are good at that and start to work with them. I call that building networks, not networking, although that's part of it. But it's like, as an example, this guy, Sean Ward, and his client is a guy named Steve. they didn't have anybody who could help them subdivide these condos. They knew they wanted to sell them. They knew they could get a 30 to 50% value boost in the sale by selling individual, small bay, industrial spaces, but they didn't have anybody who could basically get them to over the hump to do the thing technically that needed to now sell these units, right? And I would put that in the same vein, right? If somebody's looking to move into a different like land sale type in the brokerage community, find people who do that thing. Now, it could be other brokers that are, great land brokers. Maybe there's sort of mentorship relationships. You could talk to other people that are users of those. Let's say you want to decide you want to sell industrial land. Well, you could obviously go, talk to the users of that industrial land, right? So big companies like Prologis, would be examples of the sort of users of those kind of assets and learn that part. But you would also pair up with people that are facilitators of industrial projects, like if that was going to be your choice. Um, not to oversell myself here, Chris, but like that's a lot of what we do in this development services offer is, we'll have a broker call us and go. In fact, we had a guy, a friend, a guy named Brian out in San Bernardino. His client had a residential zone site, but it's a commercial corner that wants to be used not for housing, but for some commercial use, and they can't lease it because it's residentially zoned. And he's like, the guy told me, he said, the client wants me to rezone this thing, and I don't know how to do that. I mean, he's like just being, clear on what his capabilities are and where the limits are, but I know it needs to change because I can't lease the thing to save my life. He's a good broker, but it's just real estate in specific situations. So we'll come in and basically facilitate that change. But even in the beginning of that, Chris, we'll just sit down and go, is this the right strategy, right? Is residential to industrial, commercial the right strategy? It is locationally. Interestingly enough, politically, this is in I want to say the city of Rialto. I think it's unincorporated land. There's some political questions. Does the county of San Bernardino want this commercial corner? And we're not sure about that. And we're sort of going through the question. So a lot of it is like just pairing up with people who know how to do that thing, learning everything you can about that. Obviously, facilitating a lot of conversations, a lot of meetings to get up to speed on that and really, but fundamentally, Chris, be in recognition that you know your limits of your knowledge, and you don't try to be an industrial broker, but you can surround yourself with teams and people and networks that know that business really well and work with them in a way that will enhance your ability to both learn how to do that product, but also look good in doing it, right? Now, there's always a beginning. You always be a beginner of moving from residential to industrial in this example that I'm using. So you have to sort of acknowledge that as well. But it's like as a great teacher of mine is like be a good beginner. Like understand how to be a good beginner, which is where everybody starts to eventually become an industrial, powerhouse, a specialist in, whatever product you're going to do. Like you'll be a beginner and you go, I need great teachers, I need great mentors, I need great colleagues and partners and, vendors and people that I work with. I think that's going to be a real key.
Okay. And one of the questions that everyone wants to ask up front, but they shouldn't, is what are commissions like and who pays them?
Meaning in land deals
Yeah,
specifically.
specifically, since we're talking
Um,
about land development here,
yeah.
you know,
Look, I mean, I think, it's like it's no rocket science there. Um, Gosh, let me think about the last like two or three land deals that we worked on. Look, I think you're probably going to be in the 3 to 5% range, depending on the size. The bigger it gets. I mean, this is one of the things about land deals. You can get like a really giant land deal that's, hundreds of millions of dollars. Obviously, the fees are going to shrink as a percentage.
right?
So you might say, 3% as a bogey. Part of the question is there a co-brokerage? Is there a selling broker and a buyer broker? And do you have to share? So I don't think there's it's much looser. Let me put it this way. Fundamentally, the amount is much looser than what people would be used to in the residential world, although we know that's disrupted now, right? From, the normal 6% and it's going through all its machinations now. But look, I think it's going to range in that range that I gave you. And then it's just a function of like everything is, deeply negotiated. And then there's always the normal sort of tricky situations, like as an example, we work a lot where we have brokers that will send out in the marketplace to go find us deals, and I will promise them or contractually obligate ourselves to pay them 3% to just go find the deal for us because if they find a willing seller that's not represented by a broker, particularly in the land environment, that seller doesn't want to get a broker. They, in fact, arguably often, even 100% of the time if they could, they don't want to pay any commissions. They just want I'm going to sell my land. I want my net number. I don't want to use a broker. Like this happens all the time. And so then my broker will come in and convince them to sell. That guy doesn't want to pay a brokerage fee, that seller. And so I'll take care of that. And I'm doing that to incentivize that person to go out and like look for sites. Although quite often, Chris, I'll go, hey, here's a site. I found it. You go work on it. Like you call the people, you get it, find out if it's for sale and, do all the brokerage stuff that is, and I'll still pay you the 3% because I'm interested in one, building relationships with people that will continue to find us deals on our development operation side. Um, and like I also know for everybody to be incentivized, right? Like anybody who follows Charlie Munger, show me the incentive and I'll show you the actions. I
Hmm.
want, these brokers to, be pit bulls for us to go out and find sites and take care of them so they'll keep bringing me sites over and over again. That's just our, personal philosophy, although that is a common move in the development and home building worlds, to incentivize buyers, brokers. And then sometimes they'll share, right? So sometimes they'll go, hey, Scott's going to pay me 3%, but the listing broker is going to, is offering 2%, and, I'll get half and they'll get half. And that's, that 2% is probably really low. Maybe it'd be like 3, and, you get, a point and I get 2, or it's 4 and it's 2 and 2, or whatever the number is.
Hmm. Okay, cool. Now, today has really gone different than we expected from the beginning. It's been a great organic conversation.
Good.
So I really appreciate you going with the flow.
Sure.
We got just a few minutes before we close. Do you have a couple of slides you want to share or some case studies,
Sure.
or
Yeah.
is there something else you'd like to do?
No, I'll share. It's just like 4 slides, so it'll be relatively quick. So I'll share in Zoom, Chris, just to make sure we do it
Yeah,
right. Okay.
yeah.
Cool.
And you're starting your screen sharing. There you go.
Yeah. Gotcha. So I always love showing these case studies, and this is a pretty broad range of different product types. You won't see a lot of raw land in here, but there will be some land entitlement stuff in here. But in California, for all those folks that are based in California or in the, multifamily apartment sales, investment sales marketplace, anybody who does that product regularly now knows the state of California has accessory dwelling unit laws that are pretty aggressive. And so we're advising owners of portfolios on where they can put ADUs. And so an accessory dwelling unit would be either a standalone new construction unit or it could be a new unit built in existing space. And so this example you have in front of us is a family friend, Dave Erkman. He's got a portfolio of projects in Long Beach. And we've advised Dave initially to convert these garages, which are more or less dead space. They maybe rent for $100 each. Nobody parks in them because they're too small, for the cars today. And so we would come in here and take these 4 garages and turn them into 2 apartment units, dress up the outside so it looks good. Although this is on the alley, right? In the alley on the left side of this building, but that ADU conversion of existing apartment assets, either adding units or converting space into new units, is a real big move that people are making and a really giant. I mean, you can imagine the value enhancement. So I'm any apartment portfolio owner, apartment owner that I ever talk to, I tell them, look, you guys should be taking advantage and build as many ADUs as you can, whether you're going to hold it long term or sell it. That's a move that you should make. And so our offer in that is we'll basically do full turnkey. We'll do all the strategy, underwriting, plant management of the architectural process, permitting, plan check. We don't do the construction directly, but we oversee the construction on behalf of the owners if they want that. And so basically we're, talking in this case, Dave, we'll do everything turnkey and just, turn over completed units. They do the lease up. Obviously they're already managing the properties given it's their existing portfolio. This one I'll just talk real quickly. This is the Sean Ward example, the CBA Rich Ellis, Orange County industrial broker. Um, and this is the condo subdivision of industrial buildings. So this is their classic contractor roll-up door space, Chris, right? Little office in the front, big roll-up door. I park trucks in there. I store materials, or whatever other uses. In this case, this is presently a single property. They're leasing all the units to just regular, industrial users. We're going to come in and subdivide legally each of these, A through M, uh, you know, units that you see, and then Sean, on behalf of the owner, can go sell those units individually. And the rough math is 30 to 50% value enhancement on the per unit sales by being able to sell this individual unit that's, let's say, 2,000 square feet to an individual user. And this is a relatively obscure product. Not a lot of people do this industrial condo subdivision, but when you see it, Chris, it's like pretty amazing. I mean, the numbers are off the charts as far as value enhancement for the owner. So in this case, we'll process all the entitlements. So track map, all the things you need to do the condo sales. It's a city process. It'll go to planning commission and city council, all the normal sort of zoning type. This is not a zoning move. This is just doing the subdivision of the units to be legal saleable when we're done, which falls under the California Subdivision Map Act. This one we're doing with Martin Porter, Marcus and Millichap, locally here in Southern California. On the lower right is the property. You can see Century City in the background. Those high-rise buildings are Century City. So this neighborhood is Westwood. So if anybody knows Westwood around UCLA, that's this neighborhood. Amazing neighborhood to own apartments. And what this owner wants to do is basically build this building you see in the rendering section, a high-rise affordable housing project. It is in the city of LA, and I know I said I don't do work in the city of LA, but that's as a developer for my own account. But as a consultant, advisor, project services provider, we do all kinds of work in the city of LA. And so what we did in this case is this owner had been under contract with another developer to build this building. That developer, for various reasons, bowed out of the project, but all his entitlements for this building were in his name, the developer's name. And so what we came in is we basically we transferred all the entitlement package, all the entitlement applications, and all the entitlement rights back from the developer to the owner, freeing him up to now basically go out and sell this property, which is, it's actually on the market now, where they'll basically try to find a developer to build, who would buy the site at the valuation that this building that you see on the left provides. And, roughly we think the value enhancement is, probably somewhere between, 50 and 75% above what it would sell as existing apartment units. So again, you can see the pattern, Chris, over and over again. It's basically making some move, entitlements, strategy, product market fit, that basically at the end of the day makes it more efficient to get it done and be ready to sell, meaning probability of sale is heightened, but also the value enhancement in some cases is like massive. This last one is not a project that we undertook, but this is a good example of the kind of work that we do. In fact, we did work on this building. This is in downtown Long Beach, my hometown. And they took this building, which was an old Verizon, it's an old GTE building. Like, it was, in fact, it wasn't a telephone equipment building, like a switching building, Chris, but it was the home of the Yellow Pages in
Hmm.
Long Beach, right? Everybody who
So
remembers the Yellow
sales
Pages.
offices.
Exactly. And it had been built like in the late 60s, and it had been empty for a few years. And we actually worked on this deal, hence the reason I know about it. But what we have as a company is a specialty and knowledge of having executed on multiple deals of converting old office buildings into residential. And this is like a great example of that. And we're probably one of only maybe 5 companies in Southern California that has done numerous office to residential conversions. And that is sort of becoming a trend, right? As we all know that the office market is like getting crushed, right? Like as the work from home, situation continues, a lot of office buildings should and could be looked at as residential conversion opportunities. Not all buildings work that way or work well for that, but also you need to pair that up if you're going to do that or sell a building like that, that the execution of the conversion is pretty tricky, both from an entitlement standpoint, but also on the execution of construction standpoint. And, these buildings could easily get away from a developer owner who wants to convert, like the costs could go out of control. And so having like a partner with you or an advisor with you who can take you through that and, sort of keep cost control and expediency increase is very valuable. And then I'll sort of tell you, this is a little deal. This is an opportunity zone site. So this is one of our own deals, Chris. This is a 48 unit apartment deal. You can see at the top, this is our townhouse. This is the 5 bedroom product.
Hmm.
But I picked this one because this is a great example of the kind of land locations that we talked about. So this freeway here is the 10 freeway, and we're about a mile and a half north of the freeway, right? We happen to be close to, great retail. This part of Inland Empire is like chock full of logistics, warehouses, and is a major job center in this, Inland Empire part of Southern California. And so we basically are building these kind of communities on old, right? Look, this is the old house, Chris, on the
Yep.
big giant lot that's R3. Like this is a perfect example of like sort of typologies and site location choices. But I highlight this one just to show off our product a little bit, but also this happens to be an OZ qualified census tract. And so these are available for, and we're raising money and have raised money successfully to make these OZ investments as well. So we'll hold this one long term. I think that's it. Yep.
Cool. Wow. Today has been a lot of fun. There's your information. And who would be the ideal person to contact you? Who do you want to talk to?
Basically brokers. I mean, I love talking to brokers. Of course, we talked about land deals. We can be a source of help on the advisory side, like we talked about. We're always happy to talk to investors, and particularly OZ investors, people who have capital gains to invest. Like we can be very helpful there. Lenders, we're always in the market for construction and perm lenders. So it's a pretty broad, choice. And look, let me make this offer, Chris. It's just my personal philosophy. Call or email me. I will help you. Even I often talk to brokers who are like, hey, I need an answer on this site. Tell me what's the best methodology, and we can spend 10 minutes on the phone. And I pretty much can guarantee most people that I'll be of help some way, no strings attached, free. But I really like doing this sort of, strategic advisory and, thinking about how to maximize highest and best use for sites. So I encourage people to email me, and, I can spend a little time and be of help to people in, pretty much any domain in real estate.
And I would like to add that I heard you do a presentation for another group last year. I contacted you after the presentation, and you've been very responsive. It's
Okay,
been
good. Right.
been
Great example.
surprising
Yeah.
how responsive you've been compared to a
Yeah.
lot of other people
Yeah.
in the industry.
Again, Chris, it's that who, not how, right? I mean, there's a famous guy whose name I won't mention, but he said, strangers have everything you need. They have deals, capital, help, knowledge, other people that they know. And so the more you lean into that, like, getting to know and meet people, I practically will spend the rest of my career basically doing that. So, and, by the way, I love doing it. I love talking about projects. Frankly, the messier, the better. I love doing that. So it's fun for me. I'm a glutton for punishment. Put it that way.
Excellent. Well, we've really appreciated you being here today, and thank you very much for joining us. And we look forward to hearing from you in the future, maybe some interesting projects that you've got coming up.
Absolutely, Chris. Thanks for the invite. Appreciate it.
All right, thanks. Take care.